A lot has shifted since my last prediction regarding SoFi's stock price for 2024. In this video, I'll provide an updated forecast using earnings per share EPS expectations for 2025 and the forward price to earnings P ratio. By combining these metrics, we can estimate a range of potential outcomes for SoFi's stock price by the end of 2024. Let's dive in.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Currently, SoFi's stock price is trading at $6.41, a significant drop from the $9.60 it was at the beginning of the year. Recent days have seen further declines after a major investor lost their board seat and sold all their shares, adding selling pressure and driving the price down. We'll explore other factors influencing SoFi's stock price later in the video, particularly in relation to its valuation by the end of 2024. SoFi is trading at a forward P ratio of 29.47, which is the lowest valuation it has seen based on this metric since early 2023. The consensus among Wall Street analysts tracking SoFi stock estimates an EPS of $24 for 2025. While these predictions are not guarantees, they are informed by analysts who closely monitor SoFi, participate in its conference calls, and maintain relationships with its management. The EPS estimate has not fluctuated significantly in the past 90 days, moving from $25 to $27, and then settling at $24, indicating stability in analyst expectations despite the stock's volatility. The primary reason for the recent volatility is the substantial sale by the former board member, which lowered the stock price. I view such events as investment opportunities. When a stock becomes undervalued due to selling pressure, it can present a more attractive entry point for investors. Companies that fall out of favor can often offer significant returns once the market corrects. Having gathered the necessary data, let's examine the scenarios for SoFi's stock price. If the EPS remains at $24 and the forward P ratio stays at 29.47, the stock price could reach $7 by year's end, representing a $66 increase from its current price, a more than 10% return in a bit over 6 months, which is a solid performance. If the forward P ratio increases to 32, the stock price could rise to $7.68. Should the forward P ratio climb to 35, the price could hit $8.40. Conversely, if economic conditions worsen, the forward P ratio could drop to 20, bringing the stock price down to $4.80, a significant decline from $6.41. However, given the magnitude of SoFi's recent stock price drop, investors might not be overly dismayed by this downside scenario. The primary driver of a potential downside is ongoing economic weakness in the U.S. SoFi's loan portfolio is heavily weighted towards personal loans, which tend to default quicker than other types of loans. Rising credit card delinquencies and balances, coupled with an increasing unemployment rate and high interest rates maintained by the Federal Reserve, could exacerbate these issues. If economic activity continues to slow and defaults increase, SoFi's stock could suffer as investors lose confidence. On the flip side, if economic conditions stabilize or improve, the Federal Reserve might start cutting interest rates, as they have indicated they might do by the end of this year and into 2025. Lower interest rates could boost borrowing and economic activity, leading to a soft landing and renewed growth. This scenario could expand SoFi's forward P ratio beyond 35, significantly boosting the stock price. In my base case scenario, I foresee a forward P ratio between 30 and 35, with SoFi's stock price ranging from $7.25 to $7.95 by the end of this year. This would be a notable increase from the current price. However, outcomes could be better or worse than this projection, depending on various economic factors and the company's performance. In conclusion, while predicting stock prices involves considerable uncertainty, using forward P ratios and EPS estimates provides a structured approach to forecasting. For SoFi, the potential for growth exists, but investors should be mindful of economic conditions that could influence its performance. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.